I'm Ben Reppond. Welcome to my YouTube broadcast. Today is February 5th, 2025. Okay, we're going to get into the market insights, and this is a dashboard showing tells you a lot in one place. So I've got 6 indexes, 4 U.S. and 2 international, and the long-term government bond. And looked at with moving averages, 20, 50, 100, and 200-day moving averages, representing the 4 columns of dots going to the right, and then the last week and year to date. So just about everything you want to know is right there in one picture. So for the last week, you see that mostly the market was negative. It was more negative than positive, at least from this perspective. Bonds went up a little bit. And then year to date, which is going to cover about a month, you see that in the pink box. And I thought this is kind of interesting that the number 1 index is the developed markets, which is mostly Europe and Japan. Dow Industrials, 2nd. S&P 500, 3rd. The Russell 2000, small cap index, 4th. The NASDAQ 100 is 5th, the growth index. So this is not favoring growth stocks. This is favoring mostly value stocks and some international. The pink box, as you go across, you can see all of them are positive, and bonds ticked up slightly into a positive category. 20-day moving average, all positive. 50, all but 3, etc. You can see that going across the page. But just looking at last week, I would say it was more negative than positive. And there were 19 green dots out of 28 compared to last week, also 19 out of 28. The sectors tell a little bit more of a story. This is where you take the S&P, tear it apart, get under the hood a little bit, and see what's going on with that one number, the S&P 500. Now we're going to look at 11 parts of that one number. You can see they're listed on the left, and again, this is extremely interesting to me, very value-oriented, very defensive-oriented. So you have on the top, this is ranked year-to-date, top to bottom, healthcare, financials, basic materials, industrials, consumer discretionary, telecommunication, energy, real estate, retail, consumer staples. Last out of 11, 11th out of 11, technology. So growth has come out of favor. Now, that'll change at some point, but right now, value, or you could even say the Dow Industrial Index, but value is more in favor than growth. And we've seen growth for quite a while, but now things have shifted. The yellow box shows what happened last week, and when you look at the number of red, I guess they're pink, colors there, those are the ones that were negative for the week, and then there are 4 of them that are positive, but by and large, it's more of a negative market. And look at technology, down 3.5%. When we get to the year-to-date, they work from a positive 6% all the way down to the bottom. Again, year-to-date, technology down 0.75%. Pretty interesting. And then you see the 26 green dots to the right versus 33 green dots the previous week. The S&P 500, when I put it on a line chart, this is a 2.5-year, 30-month chart, pretty much goes from one end to the other. There's kind of one major blip in there, but most of them it's just going up. And at the very far right, you see where it comes down a little bit at the upper right. The line comes down a little. That's last week. So yeah, it was a little more negative than positive, but not enough to move this line very much. Same thing, 30-month chart, weekly, one candlestick equals a week. And you can see at the very end of it that it was, negative a little bit. Started down and then worked its way back up, but still ended negative. This is a relative strength chart, so this is the NASDAQ 100 compared to the S&P 500 on relative strength. So the thing that stood out to me on this, of course, I did put a black arrow to show the macro direction, but really when you look at, I don't know, maybe the past 6 or 8 months or so, it's basically been in kind of a downward direction. And what that tells you is that the broad market, the S&P 500, is doing better than the NASDAQ 100. The last part of the chart, that little piece at the end, is pretty much all moving in a downward direction. Again, signaling the S&P 500, the broad market, stronger than the NASDAQ 100. Then we have growth and value. Now, this is not the same, but it kind of reflects a little bit of the sentiment. Macro direction, definitely upward, favoring growth. And when it comes down, that favors value. So last week, you see that tick down at the far right. Okay, that represents value was more in favor, which we've already covered. But during the past 6 or 8 months, a lot of up and down. The S&P versus small cap. So when this goes up, it favors the S&P 500 SPY. And then when it goes down, it favors small cap. IWM is the ticker. And again, a lot of up and down. And you can see that basically the S&P 500 large cap is a little bit more positive than the Russell 2000 small cap index represented by IWM. Long-term government bonds continue to fall. Last week they went up just a tick, not much. But the 5.5-year view, negative, going down. Why? Interest rates are going up and bond yields are going up. If bond yields go up, price of bonds goes down. This hurts traditional portfolios, 60-40 or 50-50, whatever you have. And a lot of people have those. And this has... And not everyone's invested in the long-term government bonds. Some are invested in corporate bonds or intermediate-term government bonds, etc. So, but this is the bond fund represented by TLT. The U.S. dollar ticked up at the very end. So again, you see the trajectory. This is a pretty clean chart, very clean trajectory going up. And the dollar is strong and getting stronger. Gold, again, a fairly clean chart. It's going up, and you see the last month or so, it's been going in an upward direction, including last week. Silver is not as clean a chart. It jumps around more. And so, yeah, it went up also. You can see that at the far right of the chart. But with silver, at least in the past several years, you put up with more volatility. Bitcoin, a little bit pullback last week. You can see at the far right, not that much, but still it's on an upward trajectory. Volatility index came up, which means probably equities, or namely the S&P 500, is going down. And when it goes down, it tends to push the volatility index up. It's kind of inversely correlated with equities. This does not include Monday, the 3rd, so we'll see, and we don't know the rest of the week. There's, other announcements that are coming this week. So the one thing that I've kind of got in my head is get ready for a rocky ride, because that's what's happening right now. Asbury, this was interesting. And remember I showed you that the S&P 500 is more negative than positive, right, for the week. However, when you get to the Asbury 6, the metrics that they use, 6 metrics to measure the market, all 6 of them are positive, and they were positive last week, so nothing changed. Looking at the far right 3 columns, the last week, the last month, the last quarter, measuring the relative performance of certain assets compared to other assets, only one of them is positive in all three categories, and that is large cap stocks. Large cap is stronger than small cap in all categories, but all of the others, when you get to stocks and bonds, uh, small cap, technology, value growth, emerging markets, developed markets, all of that are mixed. Some are good for this period, some are good for that period. In other words, there is no clear pattern except large cap. Okay, the U.S. versus the world. So the countries, the stock market in general, the broad market of the following countries are better in all three categories than the U.S. Chile, Germany, Spain, UK, Eurozone, Singapore, and China. The U.S. is better than the following countries. Stock market now. Peru, Canada, Malaysia, South Korea, Thailand, that's interesting, New Zealand, and Australia. Here's a chart, another clean chart, that shows the relative strength of the U.S. market versus the South Korean market. And again, it shows, because of the tick up at the end, it shows that the U.S. market continues to be stronger than South Korea. It's stronger than most markets because the economy in the U.S. is generally pretty solid and the dollar is strong. So it's not surprising that the U.S. market is holding up well against most of the countries. Okay, gold and silver. So as of Friday, January 31st, gold hit $2,800 an ounce on spot price before you put the markup on top of that. That's a 2.9% increase from the previous week. Silver is up to $31.93. It just continues to gradually, like gold, continually climb up. That's a 3.5% increase over the previous week, still maintaining about an 88-to-1 gold-silver ratio. A monster box of silver, silver bullion, which is just pure silver, not coins or collectibles or silver eagles or anything, just pure silver. One monster box is $16,370. This thing went down as low during the past year. I remember it ticked below 12,000 and was down around 11,000. And then it moved up around 12 and 13 and 14. And here we are, it's already at 16,000. So definitely been a good. And the markup is $1.01, $1.01. So it's competitive for silver, and which is why the markup is down around $1.01. When you put the markup on top of spot, that brings current spot, it brings it to 32.74, which is how I get to the 16,370. And this is courtesy of my son Preston, who's in the precious metal business. Okay, well, thank you for watching. If you have questions or comments, leave them in the comment section below.